Before we do our market splits, we have 5 value drivers: revenue growth, EBITDA margin expansion, multiple expansion, cash flow generation, and gearing. To build this, we only need 4 metrics. They are the entry and exit, total equity value, net debt, revenue, and EBITDA. And that's it, only 8 numbers per company. To break out addressable market growth and market share growth, you need an estimate of how much the company's addressable market changed over the holding period. I use beta sub R for that. It's a number that you might take from an industry expert report like Gartner or Forrester, or you might estimate it from economic data. For example, I've used the U.S. Bureau of Economic Analysis website in the past, where you can download decades of free data providing gross output by industry sector. To get market multiple expansion and intrinsic multiple expansion, you just need the prevailing market multiples at exit and entry. That's 2 more numbers. Here, I would tend to look specifically for private equity M&A multiples rather than public market valuations, although those can work as well. Many rely on services like PitchBook for something like this, and several of the investment banks publish reports with data in this area. R.W. Baird's M&A Outlook is a good one that I've used in the past. And then for the sector gearing and excess gearing numbers, you just need to look at a few comps to decide what debt level you think is appropriate. The number that you need is the average sector debt ratio, or net debt divided by total enterprise valuation for the typical sector peer. I would probably look to Capital IQ for this one, but you could probably figure it out on Yahoo Finance. So if you add the 4 market numbers to the 8 capital structure and P&L numbers above, that means we only need 12 numbers to make this chart with 8 different value drivers. And you see that doing it this way gives us a lot more flexibility and control in tailoring these metrics to the industry or sector of the private equity deal.